Physicians are trained in the art of medicine, science, and healing. We call this the practice of medicine. But healthcare is a business. SMA's Business of Medicine podcast is designed to educate physicians on a wide range of business topics with the purpose of empowering physicians with the business knowledge they need to better enjoy the practice of medicine. This podcast is sponsored by SMA Services. SMA Services is a wholly owned subsidiary of the Southern Medical Association, founded in 1984 to address the business and financial needs of physicians. With May being Disability Insurance Awareness Month, we felt it was the perfect time to brush up on our knowledge of disability insurance and address important issues members are experiencing at the time of claim. Today we're talking with Blake Gillies, president of the DI Concierge in New Orleans, Louisiana. Blake and his firm are SMA's exclusive partner for individual disability insurance. Later in this podcast, we will also be joined by Dr. Clement Cotter, a board-certified plastic surgeon and owner of Cotter Plastic Surgery in Alabaster, Alabama. So, Blake, thanks for joining us. Expand a little bit on the importance of DI and why this topic in general, why this type of insurance in general is important.
Yeah, thanks, Randy. First and foremost, one's ability to earn an income for their family really is their greatest asset to them. Keep in mind how many years you were working, right? 30, 40 years of earning an income. There is no other asset that you can provide to your family that's more important than that. So what I would say is for a fraction, usually 2 to 3% of your income, we can make sure that that income is protected for your entire working years.
What is the most commonly misunderstood aspect of disability insurance?
Yep, I would say it's really twofold. One is the taxability of the benefit. A lot of times people that are offered a plan through their employer do not understand that that benefit, if it's paid by their employer, is taxable to them at ordinary income rates. So that would be number one. And number two is really how the overlap of group and individual coverage work together, and then some instances work against you, depending on when you apply for each of those. So that is the two things, Randy, is the taxation and then how they really overlap one another and at the time that benefit's paid.
So it looks like Dr. Cotter has joined us. Dr. Cotter, would you like to ask Blake some questions?
Well, sure. And Blake, thank you for the opportunity, and thank you for your association and with Southern Medical Association and your help with this particular topic. Randy is very familiar with my particular situation, but I'll try to keep my questions more general as they might apply to other physicians in particular that are looking to protect their income should something happen that would change or alter their ability to earn an income. And I guess my first question is the definition of exactly what disability insurance is designed to do.
Sure. So thanks, Dr. Cotter, for letting me talk about this with you guys. So I would say there are two main types of, when you're looking at a disability policy, right, there's two types of what we call, what is the definition of disability? And that can be what's called a true own occupation definition of disability, which is what your medical market typically purchases. That will include specialty language in there. So that way, if you are a surgeon, an example we always use is if you are a surgeon with a true own occupation definition of disability and you are unable to perform surgeries, but you're able to go teach a medical class or school, then technically you are disabled by the policy's definition. So that really, the policy definition is what's called specialty language there, versus what is your standard on the group long-term disability side is what's called an any occupation definition. So that would mean if someone is disabled and they are able to perform any occupation, any gainful occupation, they are not going to be considered disabled. Does that answer the question? There's really two types: your true own occupation definition of disability, and then what's called an any occupation definition of disability.
And just to take that another step further, how is the definition of the specialty defined? Who in particular sets that definition? Is it like contract language or industry?
So I didn't mean to interrupt you. It is really both of those, right? So I can send you some marketing materials on that, but really per carrier, they're going to have specific marketing materials with their contractual language in there for specialty occupations.
Please compare and contrast individual versus group disability insurance.
Yeah, so Randy and Dr. Cotter, Randy shared to me kind of the situation that we're in here. And I would say the main difference from an underwriting standpoint with group long-term disability versus an individual policy is the financial underwriting piece. So let's take a group long-term disability policy that you get through an employer. They are going to offer you this benefit up to whatever it is, $20,000 a month for X amount of dollars per month for you. And when you're disabled, then they will do some financial underwriting to make sure that your income justifies the $20,000 a month. So if you take that, you really flip the script on that when it's talking about individual disability insurance, because in individual DI, you really have this financial underwriting prior to getting the application done. So we submit the application, we're going to go through a financial underwriting piece with whomever it is that's applying. We're going to look at tax returns. More than likely, it's 2 years of tax returns. And we're going to go through them and actually show the underwriters at the company, this individual makes this amount of money. He has done so for the last X amount of years. We project his income next year to go up. That way, when the insurance company makes an offer on that basis, so let's say they offer $15,000 a month, you know that you've already been underwritten financially for that $15,000. So there's no need for you in the future to prove that you have that amount of income. You really submit tax returns at that point to verify that you're still earning an income. I think that is the main difference in the underwriting aspect, is the financial underwriting on group is done at the time of claim. Financial underwriting on individual is done at the time of application.
Okay. And other than that, any other major differences between the group and individual?
Yeah, so the difference there is the taxability of the benefit, and this goes for group or individual. If your employer is paying the premium on a disability benefit, then the benefit at claim time is taxable to you as an employee. So most of the time, group long-term disability policies are going to be provided and paid for by the employer. So I would say the taxability of that is a big differentiating factor. A lot of times the individual DI is going to be paid by the individual. Therefore, it is a tax-free benefit at claim time. Separate from that, I would say the portability of the product is a big topic, and not so much with the Southern Medical Association because you join the association, you get this benefit. But let's just take somebody who's unaware of the SMA and they go to their employer. Once they leave their employer, that group long-term disability policy is going to stay at that employer. It's not going to come with them. With an individual policy, that person can take it with them wherever they go.
That's been one of the benefits, Randy, of the Southern Medical Association over the years, that as a private practice physician purchasing the insurance through an association such as Southern Medical Association, no matter where that person practices, that moves with them, although it's technically a group policy.
That's correct.
And then typically when a physician, more and more physicians are being employed these days, and that disability insurance will come through their employer more than likely. in terms of how it's categorized, I'll say on a claims basis, is there any difference on how a company handles it once a claim is placed, whether it's placed as a group policy or as an individual policy?
Yes. So I would say the claim experience on the group side is not as personable as the claim experience on the individual side. And I'll say that because of really the main factor is your insurance agent. Whomever it is that sold you that policy on an individual policy will be the main contact for you with that insurance carrier, as opposed to a policy that you may have gotten from an employer that you have 200 people at your place where you work. It's hard to pinpoint that and have an agent tied to that. I'm not saying that you can't facilitate that as a group benefit advisor. I'm just saying I think the individual experience from a claim standpoint is easier because you have somebody to really walk you through that process.
Okay. And one other question, if I can, on the end of that is percentage-wise, what percentage of income do you see as a coverage point for individuals, whether they have group or individual coverage? Is it 60%, 80%? Could you speak to that?
Sure. So that's a very good question. So I would tell you that your typical group coverage is going to cover 60% of your base earnings to a cap of some degree, right? Whether it's 10,000, 12,000, 20,000. From the group standpoint, it's really a cap. It's built to cater to everybody. For instance, we cover up to $20,000 with the SMA plan at a certain percentage of your income. On the individual side, they work off of what's called an IMP chart, which is an issue and participation limit chart. What they say is, based on your income of this amount, we're willing to offer this much coverage. And they offer the coverage based really in 3 different levels. One level is going to be individual coverage only, strictly with this carrier. Another level is going to be individual coverage with more than one carrier. And then another level will be individual coverage with some sort of group coverage layered in there. So with just the group aspect of this, roughly 60% of your income will be covered. Now, keep in mind, most of the time that's taxable to you if paid by your employer. On the individual side, on its own, depending on the income of the person, we can get roughly 70-ish% of their income covered. Now, but keep in mind, the higher income goes up, every company has a limit to the amount of coverage they're willing to offer per individual. So our typical saying in the DI world is really for 2 to 3% of your annual income, we can cover roughly 75% of your income.
And another question I have has to do with physicians that say either own their practice individually and are purchasing that insurance, say through a Southern Medical Association or in a small group, versus the employed physician. And let's go, maybe we just go to the group side, because Southern Medical, of course, is selling group insurance or is facilitating group insurance. As an individual, for example, I own my own practice and have disability insurance group policy through Southern Medical versus someone who may be like employed by a group, and that employer is purchasing the insurance through Southern Medical. When the claim is turned in, are the claims handled in the same manner with group policies, regardless whether the physician is self-employed or employed by another entity?
The short answer is yes, they're handled the same, regardless of who facilitates the coverage. On the group side, they're all handled the same way. You'll file your claim, you'll be directed to a claims person at that company, and they will walk you through the process. So yes, there's no difference between really who facilitates the coverage. The process is the same.
Okay. And so just to tail off of that, because the claims are evaluated, the group claims are evaluated on the backside, and I guess I'll try to keep these more specific to Southern Medical, Randy,
Yeah.
because of the group coverage. On the backside, what I've seen with my coverage and others now is that there are a number of financial considerations that go into making the determination of what the base year will be or what the base salary will be, because the claim is being looked at in reverse, so to speak, versus an individual. Can you speak to how that is done? I mean, obviously, the income tax information is requested and financials from the practice and so forth.
So I would say how that's handled really depends on the contract, right? So a group contract can stipulate that they cover base earnings only, they can cover total compensation. That is the real determining factor here. So what I would tell you is it really depends on your contract. So and then it also depends on how you also are earning money, right? So let's take for instance, if you as an individual doctor, let's take myself for instance. I earn $1 million a year. Let's say I'm a very good doctor, and I
very good.
Yeah, very good, right? And I have group coverage through my employer. That group coverage offers 60% of my base salary up to $10,000 a month, right? That's pretty common language in a group policy. So what would happen is if I am hurt and I file a claim on that policy, they are going to request really the same thing that an individual policy would request on the front end. They're going to ask for the last 2 years of tax returns. They're probably going to ask for some CVC codes or something, how you coded your business, those type of things. So throughout that process, right, let's say that insurance carrier finds out that I have invested heavily into some real estate and I have $10,000 to $20,000 a month coming in from unearned income from owning these apartment complexes, right? They very well could hold that unearned income against my disability benefit because they will say, Dr. Blake, there's no need for us to pay you a disability benefit because you're not working and you're still getting X amount of dollars of income over here. So the main difference there is all of these questions would have been answered on the front side on an individual policy. They're now answered on the back side of a group policy. And I don't want to say that a group policy is less superior than an individual policy. It's just two totally different processes on how you get the coverage.
No, and I think that's important for physicians to know in general, especially as Southern Medical Association and other associations are involved, that the manner in which it's handled, it's buying an individual policy is more like buying life insurance. Say, you get looked at pretty heavy on the front end versus the back end. So back to my question, if you have an employed physician who has like a set salary, but say their group has been buying for them the Southern Medical policies, and I know that this would be part of the hopes for Southern Medical is to be able to engage smaller, medium-sized, larger groups that would buy the policies for their employed physicians and other providers, I suppose, Randy. So on the backside, if they had a disability, am I correct in making the general assumption that because they're on a salary, that's easier to ferret out when the claim comes in to say, your salary was $175,000 a year from group XYZ. You made, you had real estate investments and all that sort of stuff that don't really count, but your earned income with this group that the policy was bought through is a set amount. Is that the amount that up to the policy limit, I would think that would be looked at for coverage. In other words, a salary versus like myself as an owner, the way you get to money, your earnings come a little bit differently. They can come a little bit differently depending on how you structured your business, but it's cleaner, it seems to me, if someone is actually employed under an employment contract at a set salary. Is that fair to say?
That is very fair to say. The one caveat I would say in the example you used of a salaried doctor, we do a lot of work with a medical group here that all of their doctors are salaried employees. But I would say that the group coverage, because in the example you said, is paid for by the employer, it is worth noting that benefit to those doctors are going to be taxable.
Exactly.
So whatever the benefit is, it's going to be taxed at ordinary income rates. So I would caution somebody that if that's their only coverage is through the group and their own salary, we probably should look at some way to cover that 20 to 30% gap, because that benefit will be taxable to them. And I don't know very many people that can live on 50-ish% of their income today, as we're seeing, with the nation in crisis right now. So that's the one caveat I would say, is that your assumption or your statement is 100% right, except that the taxability of that benefit plays a big role in their plan if something happens to them.
And that makes sense. It's easier. It seems to me it would be easier on the backside as a claim is filed to sort out this issue of the definition of their income, I suppose, and what's being covered. It's not the farm and the house at the beach that they're renting and that sort of thing. It's what's being paid by the employer.
That's correct. And that's very true.
So how often does a review usually, what do you consider, this day and time, a lot of the younger physicians seem to bounce around. I'm a 63-year-old physician, tended to be, I'll say, a bit more stable in practice pattern, but our younger physicians seem to move much more often. And how do they get portability, or can they get portability? Maybe I'll just throw it out as a general question, but then direct it back to Randy. Is if the policy is being purchased by their group through Southern Medical, can they carry that policy with them by any mechanism? Or if they move and change groups, they just do they drop that, or is there any conversion of that policy to the next group or to an individual coverage, or in that situation, any portability?
I would probably defer to Blake a little bit here. It's my understanding that the group policy through SMA is portable in that it doesn't matter where you go to work. But what I'm understanding about group is it's sort of a stopgap product that's going to give you some relief in some instances where you might need it, but really not the answer. The more I learned about this, the more important individual DI is to sort of supplement what an employer might provide. I mean, you use the example of life insurance. A lot of employers will provide their employees with, $10,000 worth of term life insurance or something like that. Not something that's really designed to protect individuals. It's just sort of an ancillary benefit. Blake, do you kind of agree with that analogy? I think it's sort of it's a piece of coverage that's there, but because it's a group, it's not going to fit the individual needs.
Yeah, Randy, I agree with that so much. I'm going to use that. I never really used that analogy before of the 10,000 of life insurance, but that's good. I'm going to use that in the future. I used my brother as an example earlier. My brother is coming out of medical school, finished his residency, finished his fellowship. He's now going to enter into the workforce. I would tell my brother, we need to go ahead and get you underwritten for individual DI today, right? So all these individual policies have what's called a future purchase option in it. So you buy a little bit of coverage today, you get fully underwritten, and then they give you the ability to purchase X amount of more dollars in the future without getting underwritten again. So I would tell him buy whatever the residency limit is for your occupation, right? It could be somewhere between $4,000 and $7,500 per month for you without a medical exam, without income verification to him in throughout his residency program. That way we know, like Randy said, we now have a baseline for coverage. We know that no matter where he goes in the next 30 or 40 years of working, he is guaranteed a tax-free benefit of $7,500 if he's disabled. That's regardless of what other group coverage he has. We know for a fact he's getting that money because we did the underwriting prior to being enrolled in any group coverage. So if you have individual policy in force prior to a group policy being in force, you will get paid the individual policy first and then get paid the group policy on top of that. If you flip those, right, if you have a group policy first and then you want to go buy individual coverage, the individual carrier is going to hold that group coverage against you in underwriting. They're going to say, my brother, for instance, hey, Keegan, you make $20,000 a month. Instead, you have group coverage here for 60% of that to $10,000 a month. So we're only going to offer you 14 and not 20. That happens all the time. So if you, going back to my brother in residency program, I would tell him get the base coverage, individual coverage first. Then we can go to the SMA and buy you some group coverage where you can hop around. But that way, you know for a fact, no matter where he goes, let's say he goes to work for a hospital for 5 or 10 years and then opens his own practice, he now has that rock in his pocket, right? He's got that $7,500 benefit that he can take with him wherever he goes. So I know that was a very long answer to your question, but I hope I answered it there.
That's great advice for our young physicians. It's not something anybody ever explained to me for sure. And of course, I came around at the time. Southern Medical was one of the few places that physicians could purchase.
I think it still is, right, Randy?
Yeah.
Yeah,
we've been doing research on that.
Yeah, and I think that's sort of what I'm learning is that the industry has evolved since we first started the program with SMA, and it's sort of, to me, again, it's sort of, learning a lot about this industry that regardless of what type of insurance that anyone has, even automobile, things in life change, and I think it's so important to go back and reevaluate probably any kind of insurance policy you have, no longer than maybe 3 to 5 years, because things change so much. It just seems so. I don't know, Blake, if you've got any, to add to that, but I just think it's really important with any kind of insurance policy that you go back and revisit it periodically. I would say no less than 5 years to look at it, because the industry changes, my life changes, and you want to make sure that you've got what you need as things evolve. So I think we were probably early on at having this product. The more I learned about this, the more important individual is. We now offer individual through SMA to supplement group, and I think that's what really we're looking at here, is the two kind of work together, and it's important to get them lined up properly.
And I do think that's important from a perspective of I hate to even say older physician, a much more experienced physician.
There you go.
Yeah. Seasoned, right?
Seasoned.
That's right. Seasoned. Yes, very seasoned, especially in this time of Corona. You know, the seasonings change from year to year,
That's right.
but having a touch point, almost like a mandatory touch point, it places along the way, certainly would have been helpful for me. And no criticism for SMA. I mean, or especially for Randy, because it's my career in involvement with Southern Medical stretches over probably 30 years. So he you know, he hasn't been in the driver's seat that period of time, obviously, but having had a touch point, it
Check.
almost, I mean, I would say, you know, almost to the degree that if you don't do it, you can't keep the coverage, would have been important for me to have somebody sit down and say, you know, this is what you got. This is what's going to happen if you get disabled, and you need to look at something else, or you're fine.
And that's why
I agree.
Yeah, and that's why we're doing this. If a healthy patient's not going to stay healthy if they're not getting a checkup every year, it's the same concept. It really doesn't make sense that what works for me today is going to work for me 10 years from now. But I think it's important, especially for, you know, association like SMA, that we have that we are reaching out and checking in and making sure that we're educating. And that's the purpose of this podcast, is to educate people in an area that I know there's been some, you know, some pain points for, you know, you in particular, some other members that have not experienced what they needed to at critical points in their life, and we absolutely do not want that to happen. So we're trying to get out ahead of these things and to educate better on how these things work, and then aligning ourselves with partners that are really going to take care of our members like they should. So.
Yeah, and Randy, if I may add, I'd add two things. First, I don't know if we should have told this at the beginning of the call, but May is Disability Insurance Awareness Month. So probably a good time for us to be having this conversation. Secondly, Randy, what we'll do for the SMA is anybody who sends in a copy of a disability policy that they have, we'll do a review complimentary, courtesy of the SMA, for you guys. So I don't know what we need to do to get that out there, but like Dr. Cotter said, if they send us their policy, we'll look at it and say, this is exactly what would happen if you were disabled yesterday.
Nice.
And that's so important. And I'll thank you from a member standpoint. That's an incredible service. And I would encourage members that are hearing this podcast to avail themselves of that opportunity. Once you get to the point where you need to use the policy, it's much more eye-opening, and it may not be particularly in your favor if you haven't looked at it, evaluated, and at least know what's coming. So please take time to take Blake up on this offer.
Yeah. Did you have any other questions you wanted to ask, Dr. Cotter?
Well, you spoke a little bit earlier about how the different policies coordinate, and if you could speak to how they coordinate with Social Security disability insurance, I think that's an important point that I'm dealing with at the moment, didn't think about before, and how that is maybe different with an individual policy versus a group policy.
Yep, that's a good question. Comes up quite a bit. I would tell you that a true individual policy for any physician will not be reduced because of Social Security. It'll pay regardless of what Social Security pays. So that's the short answer, is the individual policy is not reduced by Social Security, whereas the group policy will be.
Okay. And then once again, on the individual, and actually on the group too, depending on who's paying for the policy, depends on whether the amount coming in is taxable or not.
That's correct. But in reality, if you have a group plan that is paid for by your employer and you will be receiving Social Security, that's 60% of your salary just dropped down to 30 very, very quick.
And that's not inherently obvious. I don't think, and most physicians that are purchasing disability insurance have no idea. I think they've been focused, especially our younger group, have been focused on learning all the technical details and the biology, and and this is the farthest thing from their mind. They're generally healthy, young, and the idea that something could happen pretty foreign to them.
Very true.
Yeah, I unfortunately think that my experience is that people in general could perceive group DI as more of a life insurance policy, and it's not.
Yeah,
It's not.
mm-hmm.
Specifically
Yeah,
group.
Right.
Specifically group.
And with disability insurance, I mean, you buy life insurance for somebody you love, right? You're dead. There's zero question whether or not you're going to use that money. You're not here. I know with disability insurance, there's a ton of ways that you can be considered disabled. So you really buy disability insurance for yourself, not for anybody else. That is the one thing we preach, is that 2 to 3% of your annual income protects your number one asset to you and your family, and that's your ability to earn an income. So let's go ahead and try to cover that as soon as we can. That's what I would say.
And that makes such good sense. It does. And in terms of the Southern Medical Association, just as a bit of history for our younger physicians, it's a lot of its early beginnings, especially, I think, Randy, and you know this much better than I do, through the 50s, 60s, there were not the opportunities to purchase insurance on the open market. And Southern Medical Association came along and was the entity that really started the concept of physicians being able to buy their own insurance at whatever level, life insurance, disability, and so forth.
Yeah.
Because those products weren't generally available to physicians as such. Certainly, you had your life insurance salesman, almost door to door back in those days. But Southern Medical has had a long experience in the insurance world, and in a lot of ways, the base of their history, at least the mid-century history, came from the insurance products that they were able to offer. And so I think it's still important.
Yeah.
Still important.
Absolutely.
And this current COVID crisis just shows, I think, it's a great example of things can happen. Things you don't know can happen. And, and whether that's a international pandemic, or some individual calamity, car wreck or something that occurs, or in my particular case, it was much more of a gradual situation that eventuated in a permanent disability. But things happen in life, and as a younger physician, you just have to know that that's going to happen. And if it doesn't, consider yourself blessed and lucky. But you just got to know that things happen in this world.
Anything else on your radar there, Dr. Cotter, that you'd like to touch on, or thoughts you have about?
I guess the coordination of the benefits and the calculation, for myself, and I've tried not to focus on my situation as much, but I think that the importance is as a private practice physician, with a pretty healthy group disability policy from Southern Medical, 80%, of income. I mean, it looks more like an individual policy, probably because I purchased it back in the day. But the actual manipulations to come up with a earned income figure has been very surprising to me. I'm not sure that there's any industry standards, but if you take the situation that there's, and I suspect there's plenty of other private practice, small group or individual physicians that are still out there, probably not as many as there were, but if they have group disability, as in my situation through Southern Medical, Blake, the manner in which the calculation is done to determine what their earned income is has been a particular difficulty. Can you speak to that just a little more detail?
Sure. So it really, I don't want to speak to anything specific, right? But on a tax return, anybody that files a tax return, right, has either passive or non-passive income. So what's going to happen is I can speak more so to the individual side than I can to the group side, because that's really where I specialize. But for us, for the carriers that we use, if somebody's unearned income exceeds $20,000 a year, whatever the difference is, so let's say they have $30,000 or $32,000 a year of unearned income, we're going to exclude 20,000 of that, and then we will divide the remaining 12 by 12 months, and then whatever we're willing to offer from an individual standpoint, we will lower by whatever that 1/12 is. So in this example, $1,000. So that is how unearned income is treated at the individual level. That as long as it's under $20,000 a year, they really don't look at it. But anything over $20,000 a year will reduce your amount of benefit you are offered.
Okay, and for also the younger physicians or others that are purchasing group coverage and knowing now that it's looked at sort of in arrears versus ahead of time, that becomes important depending on the person's particular situation, I'll say.
And I would also say that going back to my example I used with my brother, while in residency, you can get what's called entering practice limits. We talked about it a little bit earlier, the $4,000 roughly to $7,500 a month, depending on your specialty. You can get that amount of coverage with the ability to purchase future coverage in the future. And they will say in that it totally excludes any group coverage you may have. So the one way to go around the group versus individual benefit being paid, the one way to do that is to buy individual coverage while in residency and or fellowship. That way it excludes any group coverage you may have. That's the only way that an individual can buy individual coverage after they have group and it not lower the dollar amount.
And then I have one final question, if you would. So on specialty specific policies, whether individual or group, should the insured go back to work in their specialty, how is that income that they make handled both for an employed physician and a private practice physician?
So I would answer it, really, there's two answers to your question. The first answer is, let me back up. I would say if I was meeting with Dr. Cotter and I just met you, you're fresh out of residency program, or you're about to buy your own practice, I would ask you the simple question, Dr. Cotter, if something were to happen to you, what is important? Is it that your personal income is taken care of? Or is it that if something happens to you, we can make sure your doors of your business stay open? Really, it's two facets. It can be one, the other, or it can be both. We have solutions for both of them. It really just depends on what you want. So let's take option one. I'm just worried about myself. If something happens to me, I'll close my clinic, right? Every individual policy that is sold to a medical professional has what's called a residual rider on it. And what it does is it pays a recovery benefit to you if you're able to return to work part-time. So to answer your question, let's say you can return to work 20% of the time, then they will lower your benefit by 20% and pay you 80% of that benefit because you're slowly returning to work. That's the answer to the individual side. On the other side, the business owner side, I would tell you that the business owner, it's called a business overhead expense policy. So what that does is that business owner policy will pay to make sure your lights stay on, the rent's paid, your salaries of your employees are paid, their benefits, all of that stuff. And then it allows you then to collect money from the business, any profits that the business sees at that point. So it's really, I answered your question in two facets, because the one side, if you're just looking at it from an individual standpoint, they have a recovery benefit. It's called residual rider built into every policy. And then if you're looking at it from the standpoint of owning your own clinic, there's a policy specifically for overhead expenses of the business that will not stop that owner from taking profits at the back end of that.
Okay. And along those same lines, that's a great answer to that question. Do most policies have an incentive built in if the insured returns to work or is able to return to work? Are there any incentives built in to the policies to encourage that?
That's carrier specific, but yes, there is what's called an enhanced residual that will pay you an incentive to start returning back to work. So yes, that is available.
And how about cost of living adjustments?
Yep. So most carriers will offer two cost of living riders that are add-ons to the policy. One is a 3% simple COLA. The other is going to be probably a 6% compounded COLA. That's your two options usually for COLA benefits.
Randy, Blake, those are the questions that I had. I hope they've been helpful in terms of maybe physicians that are listening to this podcast and their understanding of the disability insurance world. And I appreciate the opportunity to participate and thank each of you. And I hope you stay safe in this time of Corona, and that things get back to normal quickly. But I appreciate Southern Medical Association have for a long time. And Blake, I hope the relationship is long term, and that that our physicians can take advantage of your offer to review their policies. I would encourage them to do that. Engage, get your policy looked at, and understand exactly what it is that will happen if you do have a problem.
Thanks, Dr.
Okay, well, I'm going to sign off here and head on into the day. But once again, thank you.
You bet.
Thank
Thank
you
you, sir.
very much.
Thank you for joining us.
Very welcome. Take care.
Please consider supporting our mission by becoming an SMA member or making a tax-deductible donation. You can do this by visiting sma.org/donate.